Good evening. I'd like to welcome everybody to our April 9th meeting. Before we start, I'd just like to say that we have Rhonda Smith, our new hire, new CAO, with us tonight, and she's just sitting in. She's sitting in on the meeting, and Rosalie's clerking it tonight. First of all, I'd like to begin by acknowledging that we are in Robinson Superior Treaty Territory and that the land on which we gather is the traditional territory of the Anishinaabe and the Métis. I have approval of the open session. Any add-ons or any disclosures of interest for the open session? Hearing none. Are we up with the delegations? We have a delegation of Grant Thornton for our 2022 consolidated financial statements.
Thank you very much. So I'll be taking you through the 2022 audited financial statements that are currently in draft, and we're going to be focusing on the consolidated financial statements for the township. So similarly, I don't have the ability to share my screen, but if you have copies in front of you, we can walk along together on it. So just to start off, essentially the document starts with the Statement of Administrative Responsibility, which Rosalie and Marlene will sign off on and will be included as part of their responsibility for the year-end audit. From there on in, you'll see a couple pages in that there's the independent auditor's report that we reviewed and discussed with council members essentially throughout it. So this is consistent with what we went over earlier, and again, states the fact that at the end of the day for the December 31st, 2022 year-end consolidated financial statements that they present fairly in all material respects, essentially meaning that it's a clean auditor's opinion, that we haven't found any material misstatements that would change our opinion on what's being presented here. So moving into the statement of financial position, this again is just a snapshot of essentially your assets and liabilities as of December 31st, 2022. And what I'll be doing is just kind of sharing some of the larger differences that would have occurred in comparison to the prior year numbers. So overall, you'll notice that your cash has increased by about $350,000, and the statement of cash flow further on in the document shares some details associated with what makes up that balance and where it came from. So overall, your operating activities generated about $1.8 million of additional cash flow. However, then there was capital purchases of about $1.5 million. So the net effect of your operations less your capital purchases has the impact of the $351,000. From there, you'll notice your grant receivable had a bit of a boost from last year by about $150,000, and this is because of the increase in receivables outstanding for the NOHFC portion of the community revitalization project. So with NOHFC, as compared to FedNor for the project, management's required to submit claims in order to receive the amounts that have been spent, whereas FedNor, for example, provides the funds in advance. So the difference there is just really the claim setup associated for it that makes up the biggest difference there. So your total financial assets for the year are just over $5.5 million. Looking at your liabilities, you'll notice that your accounts payable, sorry, I'm getting a little bit of feedback here on my end. But the year end, apologies, the liabilities, the accounts payable and accrued liabilities have increased quite a bit from last year. And the main reason for it is just the timing of when payables happened. When we looked at your year-end payables listing, a couple of things we've noted that existed at the end of December 31st, 2022 as compared to 2021 was there was an outstanding bill to Automation Now for the electrical ESA upgrades for the wastewater treatment plant for about $181,000. There was also Cloud Darling Limited, who installed 2 boilers, pipe venting electrical for about $192,000 that was still outstanding, and fees associated with the wastewater declaration project for about $140,000 that was sitting there as well. So a lot of it just has to do with the timing of payables, but those were specific ones that we were able to identify that were existing at the end of the year as compared to last year. For deferred revenue,
Richard,
yes.
Can I very quickly ask you to, because that number is so large, can I direct you please to, can you send a detailed itemized list of the accounts payable and accrued liabilities at the end of December to our CAO, so that she might share that with Mayor and Council, please?
Absolutely. What I
Thank
will
you.
be able to share is some of the details. Again, we don't look at every single little transaction, but what we have available, we can send along to your attention. Not a
Thank
problem.
you.
Yeah, not a problem. So with deferred revenue, in terms of note 6 breaks down the details of what your deferred revenue is truly made up of. So in this case, you're going to see some NORDS funding that's in there for about $147,000 that was unspent. There is also some federal gas tax and provincial gas tax as well that builds up that balance, which saw some increase this year as it hasn't been fully utilized. But some of the decreases you'll notice as well in comparison to the prior year is some of the FedNor funds for the community revitalization project have been utilized, and then some OSIF funding as well. So overall, there was more of a decrease, but overall, your deferred revenue stayed pretty consistent. In terms of your debt, the debt just decreased based on the principal repayments, and otherwise, your post-retirement benefits is based on an estimate essentially. So as a result, overall, your total liabilities at the end of the year are just over $3.5 million, which leaves the township with net financial assets of $3.1 million. Following that, you'll notice the non-financial assets is made up of tangible capital assets and prepaid. Obviously, tangible capital assets we spoke to throughout our audit results, where we mentioned that there was about $1.6 million in additions, about $132,000 of proceeds on disposals, which related to vested properties in the public works garage, and amortization of about $696,000. Again, some of the larger additions related to the community revitalization project as still work in progress at the end of the year for about $751,000, and about another $182,000 associated with the wastewater treatment plant electrical upgrades. From there was also vehicle additions of about $221,000, which made up of a pumper truck, Volvo grader transmission, and as well an international sander hopper replacement. So as a result, that's really what makes up primarily the additions of the $1.6 million in there, and some other smaller additions. So with that being said, your total non-financial assets is $18.3 million or just above it, which then leads to a total accumulated surplus of just over $21.5 million, which when we get to Schedule 1, we can discuss in more detail. Just wanted to pause for council at this moment to see if there's any other questions based on what we just went over before we move on to the statement of operations. Okay.
No, doesn't look like it.
Perfect. I'll take silence as a keep moving forward. So, so in terms of the statement of operations and accumulated surplus on the next page, this is a representation in terms of your actual revenues and expenditures. So as a result, I'll speak again to some of the larger changes that happened in the year. Overall, your taxation was pretty consistent in terms of what was expected. The actuals in 2022 were slightly higher, but not far off from budget. In comparison to the prior year, you'll notice that there has been a total increase of about 112,000 across the residential, commercial, and taxation from other governments. And again, a part of that comes down to the increase in taxes charged to the residents of the township of Schreiber in the year, based on annual increase. From there, you'll see user charges with water billing, other fees, and overall, the only one that had quite a shift was the other fees and service charges. So you'll notice that there's $152,000 budgeted there, $221,000 earned. The main reason for the difference in comparison to the prior year to the current year and the budget to the current year really has to do with certain items that are not budgeted for or didn't occur in 2021 because of COVID. So from a budget perspective, for example, there's about $26,000 in revenue earned for the Heritage Day revenue, but it's not budgeted for. And there was $22,000 in more landfill site revenue earned as compared to what was budgeted. We also know that there was some general increases in subscriptions and rentals, which aligns with the idea, the fact that in 2021, the organization was still being impacted by COVID. And similarly, when it looks at the prior year, because of the fact COVID was in place, again, there was no Heritage Day revenues in 2021, which there was in 2022. And as well, because of some of the things that were not operational, we saw a general increase in subscriptions and rentals in the current year there. So your total user charges account for essentially $1.1 million of total revenues, and we'll move on to government transfers. So from here, you'll notice that your Government of Canada was $341,000, pretty consistent with the prior year. The only difference between budget to actual was really that there was an additional $96,000 that was budgeted for community revitalization that just didn't come to fruition at the end of 2022. With the province of Ontario, you'll notice that it's $1.6 million that was recognized as compared to a budget of $1.5 million. The one big thing that we noted from a budget perspective is that there was no budget put in place recognized with the boiler installation. That was done by Cloud Darling. And as well, there was trail upgrades of about $50,000 that was budgeted for that did not occur. But the main difference there was relating to that boiler that was being supported by a grant. In terms of the prior year, there was more capital projects within the current year as compared to the prior year. And again, that relates back to the boiler, the wastewater treatment plant ESA upgrades for $182,000, and the community revitalization for about another $125,000 in the current year as compared to the prior year. So total government transfers, including other municipalities, accounted for just over or just under $2 million. Looking at the other element of it, you'll notice that there's more investment income in the year. Again, just in general, there's more cash available and therefore more interest earned as a result of the general bank balance that was available. In terms of penalties, pretty consistent. Fines are fairly consistent, and then other. With regards to the other, there was about an additional $73,000 recognized associated with admin other revenue, which related to some gains on disposals recognized on disposal of property, which is being displayed down below. So overall, once we take away that consideration, the budget to actual is actually fairly consistent there. So all in all, your other revenues account for just over $276,000, which gives you total revenues of about $5.6 million in the year compared to budgeted of $5.5 million. So that's the revenues. Moving on to the next page, it focuses on expenses based on your different segments. So general government, protections to persons and property, and so on. So in terms of this, again, focusing on some of the larger changes that happened in the year. For general government, there was just over $1 million budgeted, but you'll notice that there was only $831,000 incurred. A lot of general government has some of the estimates that we discussed earlier associated with the allowance for doubtful accounts, and as well the consideration of recoveries with any types of tax write-offs and any change in estimate associated with the future employee benefits liability. So as a result, the budget was fairly consistent. However, we noted that there was an adjustment we recommended to management of $85,000 for the allowance for doubtful accounts on taxes receivable, which lowered your expenses overall. There was also a $35,000 recovery in retirement expenses based on the estimate change, and about $43,000 less in tax write-offs overall. So a big part of taxes had to do with the fact that your actuals were less than what was actually budgeted in terms of your expectations. Protections to persons and properties are fairly consistent. Transportation services, budget consistent, but overall you'll notice in the prior year there's about a $100,000 difference there. That's mainly associated with an increase in wages and salaries of about $33,000 in that department, as well as about another $73,000 spent on GPS cameras in vehicles that was recognized in the current year there. For environmental services, from a budget perspective, one of the things we noted is that there was about $44,000 more in disposal fees than budgeted in terms of a cost. So that was something that made the difference between the budget to actual. With the prior year, we noted that there was more consulting fees and various contractor costs for about $60,000. In the current year, consulting fees and various contractor costs about $60,000 incurred in the current year, and this also include more chemical materials relating to sanitary sewers, about $52,000. So overall, just more expenditures from an operations perspective within environmental services. Health services and social and family services continue to be fairly consistent. Nothing notable except for the change of the fact that in 2021, COVID was still very much a reality. In 2022, restrictions were lifted and therefore changes and more expenses incurred in those programs. With recreation and cultural services, you'll note from last year to this year, or 2021 to 2022, there was about a difference of $145,000. And so when we dug into it, we saw that, again, in the current year for 2022, there was costs associated with the Heritage Day. So there was costs recognized this year, but not last year, whereas in 2021, there was very much more minimal costs. And because recreation and cultural services were heavily impacted because of COVID, we did note that as a result of, again, opening up some of the services subscriptions, that overall increase in materials were about $90,000, an additional $50,000 in salaries and wages. And then in terms of the planning and development side of the department, you'll just note that the budget was expected to be higher than what was actually incurred. And the main difference there was that the liquid natural gas project essentially was $51,000 below budget. So there just wasn't as much activity associated with that project. So all in all, your total expenses was about $4.6 million, which provides a PSAB net revenues of expenses of about $1 million. So this isn't your true surplus within the year itself. This is a public sector reporting surplus. The other item you'll notice below, though, is the fact that there was a gain recognizing the disposal of various tangible capital assets. Again, this had to do with vested properties the township picked up where essentially the property was recognized at a very minimal cost within your citywide module, and as well the sale of the public works garage. So overall, your gain associated when you compare your proceeds to your cost was about $132,000 there. So with that all into consideration, you have a PSAB surplus noted of about $1.1 million. Which as a result, you'll note that we have some correction of prior period noted, and we'll speak to that when we get to note 1. But essentially at the end of the day, that is the results from the statement of operation, which gives you an accumulated surplus of just over $21.5 million, which is consistent with what was presented on the statement of financial position. So before I move through the rest of the statements, any other questions or any questions from council or management at this point before we move on to the rest? Hearing none, I will continue forward. Okay, so following that, following those statements, there's a couple other statements that are within your consolidated statement, such as the statement of change in net financial assets, which essentially performs a reconciliation based on your annual surplus to the net financial assets that are displayed in your statement of financial position. So that $3,144,593 is the number that's noted as your net financial assets on your statement of financial position. So it's a reconciliation to support where that change came from the current year compared to the prior year. Following that, you have the statement of cash flows. And again, this is another reconciliation that's done to reconcile essentially from your annual surplus back to the change in your cash flow. So this is what I was speaking to about earlier in terms of your change of cash. You'll notice that there's a line called cash provided by operating activities or transactions, and that accounted for about $1.85 million in cash flow to the operations of the township. But you'll note as well that there is $1.4 million associated with acquisition of tangible capital assets and proceeds as well that help support some cash flow. And then the debt principal repayment of just over $43,000. So when you take the operation, capital, and financing transactions into account, that has a net impact of about $351,000. That just builds up again how your closing cash balance came to be through its operations and other means. Okay. So the important piece that I wanted to draw council's attention to is on the following page, which is page 8, which is the restatement comparative information. So spoke to this a little bit more already in the audit results package, but essentially in the prior years, the township incorrectly accounted for funding received by the NWMO as deferred revenue in error, as there were no stipulations requiring the funds to ever to be repaid to NWMO, and those funds should have been recorded as revenue once they were committed and received. So as a result, the December 31st, 2021 figures presented for comparative purposes have been restated as such. So if you were to grab a copy of last year's financial statements that were approved, the numbers under as previously reported would have been presented as such. As a result of us recognizing the deferred revenue being moved essentially into your surplus, you'll see that $384,000 impact happening, and those are the new figures that are now presented that build up your deferred revenue, accumulated surplus, and so forth and so on in your statements. Just to kind of provide a little more color to this piece, essentially when we originally looked at it, we believe that there was stipulations, and I think this was back from 2013, associated with it. This doesn't impact management's operations or council's operations because essentially the money is still there and it's still restricted. The only difference is really the presentation of where it used to show as a liability, meaning that you couldn't recognize it unless you spend money on it, now to be recognized as part of your infrastructure reserve to essentially have set aside for covering any capital deficits or such or any other projects ongoing. So this here is more or less just to ensure that it's being presented accordingly within the standards. And so this was a change that was implemented and reflected within these statements themselves.
So Richard, this is just a restatement. It has no financial impact.
That's correct.
On all of the
Yes,
statements.
that is correct. This is just a presentation. There is no impact on cash flows or utilization associated with these funds. I know Rosalie and Marlene have shared me some of the thoughts in terms of the intent of what to do with the remaining of the funds. And that's where this kind of led to this piece where, we looked into this funding a little bit more detail back from 2013 and realized, this should have been sitting in your reserves essentially, rather than still on your balance sheet. So yes, at the end of the day, it doesn't have any impact on your operations or cash flows, just financial statement presentation. So following from there, I always just like to draw your council's attention to a couple different notes within the statements. The following note of significant accounting policies is essentially the policies that management follows when it comes down to recognizing different elements of your financial statements. So that's essentially when I talk about accounting policies, that's what it's really referring to there in terms of how it's recognized. I want to draw your attention to page 14, which is basically note 4, taxes receivable. I always like to go over with council on this one because it's an element of kudos in terms of management's efforts on this, but property and business taxes receivable have continued to decrease over the years. Some of it through collections process, others through recognizing that the receivables are likely no longer collectible and writing them off. So in the past, I know when I originally started with the township, this balance used to be a lot higher in terms of tax collections and methods, and management has taken great efforts to make sure that this is being maintained more accurately, so that, not accurately, but more effectively, essentially, to ensure that properties that are not paying their property taxes are being handled in a more timely manner, and that we avoid the need to have to set up an allowance essentially. But at the end of the day, what this note is really saying is that the gross amount of taxes receivable the township has is just over $344,000, but 190,000 of it management believes is not collectible or unlikely to be collected. So as a result, the true taxes receivable that are represented as being collectible at the end of the year is $154,000 still. The other note, which is cash, is a good representation associated with any types of restrictions in regards to your cash. So in reality, there is cash of about $2.8 million that's available to council for operating purposes. There's $875,000 of designated cash essentially set aside, and restricted cash of just over $1 million. So the designated cash itself is a reflection of what funds are actually set aside for the purpose of your reserves. So that $875,000 is reflective of that. The $1,028,000 is a reflection of your deferred revenue, meaning that you have funds received from different funding agencies, government agencies. However, you haven't met the stipulations to recognize it yet. So it's still recognized as deferred at the end of the year. And then below are just some timing matters in terms of outstanding checks and deposits that have not flown through your financial accounting system as of yet. So just to bring that to the attention of the council, that essentially if you're looking to how much access to cash is available, it's $2.8 million. It doesn't mean that you still don't have liabilities and other elements to cover there, but that's essentially your available cash that isn't being currently set aside for other means. Note 6 on the following page is your deferred revenue. So again, these are the different forms of funds that have external restrictions put on them. So that's what makes up the $1,028,000 essentially, as we talked about, your federal gas tax, provincial gas tax, and then the other larger one is the OSIF, or Ontario Community Infrastructure. And then new this year is the Northern Ontario Resource Development Support. The other ones are fairly smaller, but anticipate as the community revitalization project comes to an end that the FedNor funds will be gone. And as future projects happen in capital, so will the federal gas tax and provincial gas tax. So moving forward, just going to page 16, there is also the debt note. The debt note I always like to bring to the attention of council as well, just to reflect how much debt you're managing. And again, not a significant amount, but I always like to draw management's attention and council's attention to the principal repayment schedule in terms of when this debt is expected to be repaid, which is anticipated that by the end of 2026, there will be no more debt held with financial institutions at that point in time. Moving along, the other important element I wanted to bring to council's attention is on page 21. And I think this is important because I get this question from councillors on a regular basis, but you'll notice that when we were going through your budget on the statement of operations, it didn't net to zero, which is how council essentially budgets, is that whatever revenue you have, your expenditures match. So note 15 in your financial statements, which is on page 21, shows essentially what council has approved when it came down to the 2022 fiscal plan. And so you'll notice there that the revenues and expenditures match for a total of $5.5 million, showing the fact that council did approve a balanced budget. However, because we are reporting under public sector accounting standards, there's certain cash in and cash out mechanisms that just aren't appropriate under public sector accounting standards. So for example, repayment of debt. Management recognizes that when debt's repaid, it's a expense or cash outflow. However, under public sector accounting standards, that's recognized as a decrease in your liability by repaying your debt. So the way that things are budgeted for versus represented in these statements are a lot different. So the numbers that are shown below the annual surplus of 0 are items that happen. So there's reserve and reserve fund transfers, capital items that are budgeted for, debt repayments that are budgeted for, borrowings that were anticipated or expected, as well as unfinanced capital in terms of last year's portion that wasn't capitalized, or sorry, that wasn't covered by some form of funding, taxation, etc. So as a result, those items have been implemented across the board within your budgeted figures. So this is based on, again, the budget that's been inputted into your financial accounting system and approved by council. So the numbers that you essentially saw more or less on the other side is reflective of what you see here. And then from there on in, the last piece is Schedule 1 that I want to draw your attention to. Schedule 2 and 3, Schedule 2 shows a breakdown of your tangible capital assets based on the different functions. So I won't go through that in detail as we spoke quite a bit about it. And Schedule 3 is your segmented disclosures, where it breaks down essentially your different revenues and costs by department, such as general government, protections to persons. So I won't go through that in detail, but it is there and it does match along with your statement of operations. Schedule 1 is where I find there's a lot more conversation that's important to council. And the way I want to break it down is as such. So as a result of the prior period adjustment, for example, your total reserves increased in 2021. So that $384,000 has been recognized with your infrastructure and development reserve. So you'll notice that overall in the year, though, your total reserves, which are essentially internally restricted amongst council, is just above $3.7 million. When it comes down to actual reserve funds, where funds need to be kept separately and set aside, essentially what you have noted is the NWMO funding. So rather than it being shown as a liability, now you see it under your reserve funds. So last year is 384,000, this year 387, because there's interest that's being allocated based on those funds sitting in your bank. And then funds for the recreation committee. So total reserve and reserve funds of $421,000. So those are your reserves. The part at the top where it talks about total surpluses is a bigger discussion, I would say. Your general fund is a reflection of what your actual total surplus for the operations of the township have been. Now, management has set up and made a recommendation to council that the in-year surplus that is recognized from operations be moved to your infrastructure and development reserve. So these negative general funds that you see above here are a reflection of the capital deficits associated with primarily the community revitalization portion. So this is the portion that was not covered off by FedNor or NHFC or other funding agencies. So as a result, had discussions with management on this, that the plan is to essentially utilize the NWMO funding to offset this capital deficit in the future, as those funds can be utilized for the purposes such as the community revitalization. So management has a plan essentially to eliminate that deficit so that going forward, you'll either have your general fund balance that will keep your operating surplus, or there will be no balance going forward, or there might be other capital projects that are unfunded. The investment in tangible capital assets is a reflection of what your actual tangible capital assets are from a cost basis. So that matches with what's been presented on the statement of financial position. There are two items that we recognize as being unfunded, which is something that, again, when the time comes within the year, management and council budget for it. So for example, the post-retirement benefits piece, there's a liability of $91,000 on your statement of financial position. However, management will pay these expenses within the year as they occur. And again, the estimate changes based on individuals' departures, individuals who are no longer eligible for these expenses, et cetera. The debt portion itself for $195,000 is your outstanding debt liabilities. And essentially, again, within the year, management budgets for what the expected repayments are associated with this debt. So as a result, at the end of the day, your total surpluses are just over 17.4 million. Total reserves is just over 3.7. And your total reserve and reserve funds are over 421,000. So in total, these elements here is what builds up your accumulated surplus of just over 21.5 million. So I know I shared and spoke of a lot here. So if there's anything that I spoke of that council is interested in or management would like to comment further on, please let me know. Happy to discuss any questions that are out there.
Wanted to say, because members of the public are watching this, and when you say things like we have total surpluses of $21 million, people might think we have $21 million in the bank. So I
No.
know there's a difference between the surpluses based on accounting, which takes into effect depreciation on assets and all kinds of things that are, I call it invisible because it's not cash in the bank. We did have an operating surplus last year, so there is some cash in the bank that, as you mentioned, is going to be committed to the infrastructure reserve fund. But
Yes.
for the members of the public to know, we don't have $21 million in surplus sitting around.
No. And essentially this is a buildup of a lot of different things. Like of that $21 million, $18.3 million of it is funds over the lifetime of the township essentially investing into its capital assets, right? So it's not there to be a reflection of how much funds are sitting and available. Again, some of it relates to your capital deficit. Other amounts are funds that have been set aside for different projects and purposes. But yeah, to the open public, it's not intended to be a representation of available funds that council has access to.
And I just want to add too, that's why it's very important to understand, excuse me, Schedule 1, because accumulated surplus is an accounting terminology. It's not the same as your operating surplus whatsoever. So it's really, really important. Schedule 1 is, that's why we spend time explaining Schedule 1, because accumulated surplus for accounting purposes, 21 million is not surplus money to spend. It is an accumulated surplus for accounting purposes. And this schedule shows you all the components, including the 18.3 million, which is part of the 21, but it's tied up. It's like investment in capital assets. It's tied up in capital assets. It's not money to spend. So your general fund deficit is really the number that's important, that closest ties to what you would want to explain. But yes, it's very important schedule to understand because the word surplus has different meanings.
Yeah, absolutely. Thank you for that, Judy.
I have no questions. I don't think I guys do.
No, good.
Okay. Well, thank you very much, everyone, for your time. If there are any questions regarding the financial statements or the report we presented earlier, please feel free to guide them towards Rosalie or Marlene, and they will forward them to our attention if they're not able to address them. Thank you for your time.
Thank you. Thank you.
Thank you.
Okay, so resolution 92-24. Moved by Councilor Morrow, seconded by Councilor Bryson, that council transfer from the property tax allowance for doubtful accounts $85,197.60 into the operating for the year ending December 31st, 2022. Discussion? All those in favor? Carried. Resolution 93-24. Moved by Councilor McGrath, seconded by Councilor Bryson. The council transfer the 2022 year-end surplus to the infrastructure reserve in the amount of $369,357. Discussion? All those in favor? Carried. Resolution 94-24. Moved by Councilor Burgeot, second by Councilor McGrath. The council accept the 2022 Schreiber Public Library Board financial statements, the 2022 Schreiber Trust Funds financial statements, and the 2022 consolidated audited financial statements as prepared by Grant Thornton. Discussion? All those in favor? Carried. Okay, we'll move on to question period.
I have not received any questions from the general public for tonight's meeting.
Okay, thank you. So we'll go to minutes of the previous meeting. Resolution 95-24. Moved by Councilor Morrow, seconded by Councilor Bergeau, that the minutes of the council and committee of the whole meeting held March 26, 2024 be accepted as circulated. Discussion? All those in favor? Carried. Okay, business arising from the minutes, committee of the whole recommendations. Resolution 96-24. Moved by Councilor McGrath, seconded by Councilor Morrow, that council approve the expenditure request and approval to proceed from the Ontario Clean Water Agency in the amount of $3,850.60, including applicable taxes for the replacement and installation of a positioner on filter 2. Discussion? All those in favor? Carried. Resolution 97-24, moved by Council Morrow, seconded by Council McGrath. The council accept the quotation from Levesque and Son Contracting Limited in the amount of $6,225.75 plus applicable taxes for line painting in the township of Schreiber. Discussion? All those in favor? Carried. Resolution 98-24. Moved by Councilor Morrow, seconded by Councilor Bergeau. The council deviate from policy statement F-2019-1, procurement of goods and service policy and procedures, and accept the quotation from Voice Telecom in the amount of $12,902.40, excluding applicable taxes, for the replacement of the telephone system at the Schreiber Municipal Complex, Arena, Community Hall, and the Public Works Garage. Discussion?
The Public Works Garage and the arena were not included. We originally thought they were part of the same system. So I don't know if you want to amend it, but we just, as a matter of information, it's not part of the replacement that we just had. So the garage system is separate and its phones are working, so we let it be. The arena system, the phones were not operative, but they're not part of this complex telephone system.
Okay.
So we are looking into how to fix those. We have a plan in place. Voice Telecom is going to come back and do it, but those phones have apparently not been working for a long time.
But we're looking at having them repaired.
What we're going to do, because they're not used, is have a public telephone like the one in the hall outside this office in both the community hall and the arena that operate on the same line, so that if there's anything that a person needs to, they'll be able to call out, not long distance, but any local calls. Having them on the same line saves us money. It just means that if someone picks up the phone and they hear someone talking, they can't use that phone.
Okay,
They'll just have to wait till the other person is done. But given that it's just for emergency purposes, it's not, the arena staff have cell phone that is operative for arena manager, whoever is there in the lead position when Patrick is finished for the day, it's passed over to Josh, that kind of thing. So we didn't see a need. They haven't had the landline for a long, long time.
and we just didn't know it.
Nobody noticed.
And the new phones have been installed in the main office now?
In our office here, they're all installed. Voice Telecom said they would stop by again next week just to make sure everything's working fine and that, and nobody has any questions about how to operate it, like setting your voicemail and things like that. They're quite a straightforward phone system. It's already a message for our new CIO to
So far, so good, perfect.
Okay. So all those in favor? Carried. Accounts for payment, resolution 99-24. Moved by Councilor McGrath, seconded by Councilor Morrow. That bank debits paid out of the general bank account in the month of February 2024 in the amount of $32,466.05 be approved and ratified. Discussion?
I have nothing to discuss about the February report. But can we add an item to the next agenda regarding the 2 loan payments that we're making? Please and thank you. I think it may be time for us to take a look at paying off those loans.
Take a look at it for sure.
If we can just look at it, if I can just have admin look at that for us. I think, given that we just finished going through our financial statements with the accountants, it just is starting to look like it's maybe time to take care of these 2.
We do have a special meeting next week that is focusing on financial matters, so we can have that too.
Can you add that to me? Thank you.
Okay. Any more discussion? All those in favor? Carried. Resolution 100-24. Moved by Councilor Bergeau, second by Councilor McGrath. That checks issued on the general bank account in the month of March 2024 in the amount of $246,442.28 for general accounts payable be approved and ratified. Discussion?
I just had one question. Under H. 8120, 28120.
That's funny, so did I.
Okay.
I'm sorry, I don't see H. Where are you looking?
28120.
It's highlighted on my copy.
It's under, it's just the way it's
Mhm.
presented under H,
Money.
under the banner.
Yep.
I don't see that around here. Emma Hamilton.
Do you want to hear the reply?
Yeah.
This is page 1.
I actually had the same question. Probably that you're gonna ask, and here is your answer. Oh, well, you guys have a lot of emails, so I just had this cleaned up tonight. I had asked what that was for, and that is actually, believe it or not, for the time period Okay, wait a second, I have to just, sorry, again. It's a set time period. And it is her percentage of the dance classes, which speaks to my way of thinking, how successful, honest to goodness, that program, here it is. Here's Marlene's answer. This check is payable for the dance program for the period of September 27th, 2023 to January 25th, 2024. Program fees, she receives a certain percentage, and then the town receives a certain percentage. And yeah, that's how successful that program is.
Yeah, so it's pretty,
Yeah.
it's revenue as well, so.
Yeah, absolutely.
There you go.
Yeah, you're right. It is revenue too. I never really thought about that, but you're right. Sorry about that, Rosalie, but I sent that email.
Any further discussion?
No.
Hearing none, all those in favor? Carried.
I'm gonna see you guys have question.
Resolution 101 -24. Moved by Councillor Bryson, second by Councillor Burgeot, that bank debits issued on the general bank account in the month of March 2024 in the amount of $57,971.98 per payroll be approved and ratified. Discussion? All those in favor? Carried. Under unfinished business, resolution 102-24. Moved by Councillor McGrath, second by Councillor Bryson, that council approved the appointment of Rial de Chatelet as Schreiber's community representative to the Joint Police Services Board for the term of council ending November 14th, 2026. Discussion? All those in favor? Carried. Okay, we move on to our committee of the whole portion of the meeting. And number one is acting CEO clerk report. Provincial requirement conservation and demand management plan.
This was a little surprise to me. I know you have to do a annual report for how much energy that you've used in your various buildings and your operations. And I was looking into how to do it, and I contacted LAS because they have a division that does that. And that's when I found out that we also have to do this demand management plan, and it has to be in by July 1st. I did talk to Miss Ivy about it. Neither of us has the skills to complete that report. So LAS does offer a service of doing it, and they've provided a quotation, which is not in the current draft operating budget, but we'll add it to the budget. And their quotation is $9,900. And I'm recommending that we add it to the budget and tell them they can move forward, and we'll get them the information right away so that they can have it done in time for July 1st. I do have the information from our accounts receivable clerk on all of the propane use and energy use, hydro use, and all the buildings. She provided it to me earlier.
Okay, so that'll be added for next Tuesday.
The budgeted amount.
Well, next Tuesday, we're doing capital budget. This would be an operating.
There'll be an operating
okay.
expense, yeah.
Okay, sorry.
But we need it to meet this provincial regulation, correct?
Correct.
Okay, no problem.
I think that in the essence of time and the fact that it needs this kind of, I think getting someone, I mean, honestly, we have not an affiliation with LAS, but we've certainly worked with them before. I don't know if anybody else knows of anybody else who can do this kind of reporting. My guess would be the reporting will be much more in depth than perhaps what we did in 14.
So how long is that good for then? Now,
5 years.
5 years.
Every 5 years, you're supposed to update it.
Okay, so a couple $1,000 a year then cost them.
Okay. Okay, number 2, Recreation Festivals Committee. Minutes there.
Yes.
Yeah. Well, and I,
Before when carnival.
right,
Their carnival was pretty successful. Yeah.
do you guys know when we could expect maybe a financial report?
We have not had a meeting.
No, we're supposed to have that meeting and it got postponed, but yeah.
If you guys can look into it for us?
How about, I know it's off topic a little bit, are we ever gonna get anything on the Heritage Days? What's going on?
That was supposed to be on this meeting, so we'll get with them and they get something scheduled. Yeah.
Mr. Paul has been working on it. I've seen him working on it.
Yeah,
I am going to make a recommendation for budget purposes that both the Winter Carnival and the Heritage Days be included in the operating budget. I mean, you heard the auditor's report saying that Heritage Days isn't budgeted for, and that seems a bit bizarre to me. And when I spoke to Mr. Cole about it, he said, well, we have this reserve fund, and if we go under, then if we go over, we take it out of the reserve fund, and if we go over, then it goes into the reserve fund. But it really should be in the budget. And I'm not sure that the reserve fund is the appropriate way to deal with it, but we'll have that discussion when we talk about reserve funds. But really, it should be part of your budget. You know, and I know that we don't always know when the event is being held, whether or not we will get the grants that we've applied for to apply toward it. We should have a contingency plan. You know, if we don't get, say there's a grant for $2,000 and we have an expenditure we're anticipating for $2,000. If we don't get the grant, we might cancel that particular portion of the carnival. But like we can make the budget work whether we get the grants or not. But to me, it should be part of the operating budget and always should have been. I don't know why it's some standalone separate thing. It was mentioned in the audit report. So moving forward, we'll put the reporting from the Winter Carnival, because we have only got an operating budget in draft right now. We can definitely include it in this year's final when we have the budget passed, and we'll also include an element for Heritage Days. And I'll probably just base it on last year's. Last year was a bit of a loss because we didn't get some grants. If we just use the same figure from last year, we should be.
I think we're supposed to get word on the grants that we put in for too before the Heritage Days this year.
The thing is that when you're doing your operating budget, like in a perfect world, we would have already passed it. So next year, you're going to want to pass your budget before you hear back from all these grants. So you just put the contingencies in the budget and make sure you. Budgeting is sometimes a guess, an educated guess.
An educated estimate.
Assumption.
Mhm. What do you think, Dave?
Yeah, that's fine.
Makes sense, right?
I think another part of that is your donations. You can never estimate what your donations would be, so.
That's right. Yeah.
But you take last year's figures, it's a good start.
Yeah.
I pointed Evan in some other directions for donations that were lucrative in Winter Carnival, so hopefully there were, you know, that when there's contractors that we work with on a regular basis, they will often gladly contribute, and I don't think they've been approached before. So for instance, they approached our lawyers and they gave a donation. They approached, I think, Chloe Darling, and they gave, so some of the contractors that we use on a regular basis are happy to give us a little money every now and again, give back to the community.
And there's also contractors working in our area on the highway and staying in our community, and so they may be interested too.
Okay, yeah.
Okay, anybody else got anything on that? If not, we'll move on to number 3, Schreiber Public Library Board meeting minutes in February.
Any questions?
I just want to say congratulations on the accreditation.
Thank you. Yeah,
I think that's fantastic, honestly.
that was done, I think, before Christmas.
Right?
They did it. I think it was like they got a 97% or something like that.
Right.
It was really good. It was Linda's first one, and it all went well.
I mean, that's outstanding.
Yeah.
And I think the idea of a public announcement,
Yeah,
I think that's a perfect chance for some media. For the library, I think that's wonderful. And you have a new co-op student, that's awesome too.
And I think he's done stuff in the media center before.
Yeah,
I mean, he's one of our students that works at the Rail Museum in the summer too.
oh,
So
nice.
it'll be a good fit.
Mm-hmm.
Yeah, we'll move on to number 4, just number 4, Aqua, the Schreiber Water and Wastewater Treatment Systems Report. Tammy's still with us, I guess. If you
Yeah.
got any questions, I talked to her earlier today and she didn't have any concerns, but I mean, you got any questions?
Just, one thing I noted was, under the wastewater, the pH level seems to be hard to get that under control. Meet the standard. Is that something that's changed, Tammy, that makes it more difficult, or?
I didn't notice the pH level in the report, but I can certainly do some inquiring and I can get back to you with accurate information.
Okay, thank you.
There's no more. We'll move on to number 5, the annual summary report for the wastewater treatment plant.
No surprises, but that was a big report, Tam.
Yeah, that one is, but it reflects the whole year.
Right.
Is this their usual timing that they have the 2023 report in April?
Usually it's a smidge earlier, by the end of March is when it's supposed to be in. So, and I think I did have it just on time, but with the timing of our meetings, this was the first opportunity to present.
Yeah, this is the report where I found that information on pH level, not the other one.
Okay.
Yeah,
Yeah, it's mentioned a couple places.
yeah.
Okay, hearing no more, move on to communications then. You got anything in communications?
I think we should support number 4, Town of Rainy River on the international student program.
Mm-hmm.
And it's, the University, Lakewood University, Noma, Federation College, Thunder Bay Chamber of Commerce are pushing back on that. So maybe we should support that.
Okay, we can do that.
I love that Good Roads article. That was good reading. They're not wrong. And to see the culvert replacement, I thought that was interesting.
Yeah, gonna straighten that piece of road out,
Yeah.
Rosalie, next time you're
Yeah,
up this way, maybe it'll be straighter.
Overpass bridge culvert things on the highway twinning that are both in Shunya that are so crooked. I took a picture of one. I wanted to send it to Kevin Holland.
Okay, nothing else in communications, then we got no unfinished business and no other business, so. The time being 8:17 PM. And there being no further business at hand, as chair, I declare this meeting to be adjourned.